Hello everyone, welcome to another session on dollar INR. Today we are going to cover a lot of charts. Let's get in. Okay, this is the daily chart for crude. What we have seen a support here, what we had identified earlier between 73 to 75 when the ceasefire was announced, and after the restart of war of the hostilities, we have seen crude jumping higher and it's close to 100 plus. It touched 100 above 100 today, but it has cooled off a bit and come down to about 97, 98. But what is interesting is that there is this trend line resistance and obviously the psychological resistance of $100 for a barrel of crude. Okay, so it looks like that this could cool off somewhere around the resistance of $100 per barrel. Okay, this is on the crude. Let's get into other things as well. Let's get into the bond yields, US bond yields. This is the really interesting case. If you look at the bond yields, these candle charts, the red and blue, the dark ones as well as the light ones are US bond yields. Okay, the dark ones are the 10-year yield, okay, and the light ones are the 2-year yield. If you look at the bond yields in the last almost a month or so, the US bond yields 10-year yield has gone up by more than 30 basis points. Okay, so that is quite a big jump in a short period of time. The 2-year yield has gone up anywhere around 20 to 25 basis points. Okay, now that is also a decent jump, and this is not something which President Trump would like, which the US policymakers would like. US yields going higher, which means reduced scope of any rate cut in the US. Okay, now let's come back to some more charts. Let's look at the dollar index. Okay, dollar index beautifully holding the earlier it was a resistance what we had identified before 100.25 to 106.5. Earlier it was a resistance. Now there was a breakout. Now it has come back, and this resistance is now, earlier resistance is now acting as the support. So principle of polarity is working perfectly fine. Previous resistance now working as a support, and this resistance region has held and the dollar index has gone higher 101.40.50. Obviously the yields going higher will make dollar stronger, and dollar index is holding and have gone up higher. So it's a strong dollar situation, again not something which President Trump and US policymakers would want. Okay, they want US interest rates to come down. High yields does not permit it. They want dollar to remain weak so that dollar US American exporters are getting benefited. That is also not happening here. Okay, so there is a lot of conundrum, a lot of contradictions happening here and there, but really interesting is the dollar INR chart, which we have been following for quite a long time. Okay, again the prices are very very close to the all-time high. Remember, the all-time high was 96, 97, when it touched in May. Today there was a lot of rumor that the prices might open higher. Yesterday night NDF touched 97. Today morning NDF was higher, but RBI intervened heavily. It opened around 65, 60, 55, 60, 96, 55, 60, but did not go beyond that particular range. Okay, it was around 96, 55 to 65 level most of the time. Heavy intervention by the RBI at this level. Okay, so it looks like that RBI is probably not going to let it go, not let the rupee weaken the way it had weakened earlier, but crude needs to cool off. US bond yields need to cool off. Okay, now in this kind of a scenario, what is there for exporters? Dollar exporters, please hedge. Fantastic level, use both forwards as well as options. Let me show you the option premium as well. So this is the option premium chart, 1 month, 2 month, 3 month and 4 month option premiums for at the money options. Okay, we have been following this chart for quite a long time. If you look at it, despite the hostility, despite crude being so high, the option premiums are relatively very low. Okay, so for a 1 month ATM option, the option premium is just about 65 paisa. For 2 months, it's around 90, 92 paisa. Okay, so 2 month option at 90, 92 and a 3 month option at around 104, 105. It is really attractive, and looking at the chart, it doesn't look like the option premiums are going to get very cheap from this level. Okay, so dollar exporters do use forwards and also use vanilla options to hedge. Option premiums are very cheap. Okay, now dollar importers, the spot is very high. Okay, so can't lock in forwards at this level. What you can do is buy dollar calls. Okay, at the money calls, since option premiums are lower. Okay, you might not get a very attractive, worst case rate, but you'll get a flexibility that if rupee does appreciate, if rupee does recover, if crude price does come down, rupee will recover. So you will be able to participate in that rupee appreciation. Okay, so at this spot around 96, 50, 60 doesn't make much sense to hedge for dollar importers using forwards, but you should certainly look to hedge using vanilla options. Okay, so that is it from my side. Have a great weekend ahead.